If you were in the housing market in 2022 or 2023, you probably heard so many loan officers say, date the rate, marry the house. This kind of set the tone for many of you to look forward for that future refi. For some of you, that time might be now, and for many of you, it might be around the corner. Rest assured, if you're one of my clients, this is something I watch, and in today's video, we're just gonna go over some of these basics to help you prepare for when that time arises. So let's cover some of the basics. What's a refi? When you refi, you generally have a choice between a rate and term and a cash out. A rate and term is just simply when you pay off your old loan with a new loan and you try to obtain a better interest rate and better term. A cash out is when you pay off the old loan and you try to access some of the equity in your house by borrowing more money. Now, on a cash out, you might need the money for home renovation, for starting a side business, for paying off debt, you name it. There's so many great reasons why you might need capital out of your house. How do we determine if a refi makes sense? It's actually pretty simple. Let's start with the rate and term. All we're gonna do is divide the monthly savings by how much we spent in fees. So let's use an example. Let's pretend for a minute that we're using $200 as this monthly savings, and then it costs us $2,400 in fees. This means it would take us 1 year to recoup that expense. So it's really as simple as deciding if you're gonna be in that loan for a year or longer. Anything you go past the year is a savings. Moving on to a cash out. On a cash out, you would determine if this makes sense by comparing it to other options that you have to borrow money. So is a line of credit at the local credit union better than pulling a cash out on a house? Can you go and get a business loan? Maybe you have a friend that's gonna let you borrow the money. This is how you would determine whether or not you would take a cash out, is comparing it to the other options that you have to access this capital. So here's the big question. What if I think rates are gonna get even better in the future? Should I hold off on the refi today in hopes that I can save more money for tomorrow? I think this is a little bit of a gambling mindset. One of the things that a lot of people don't realize is that there isn't a rule that you can only refi once. So in this scenario, if there's a guaranteed savings today, you could take advantage of that guaranteed savings. And then if things get way better, you can take advantage a second time. Now, what's the downside of doing this? You might lose some money in the closing costs if you refi too early. So like in the previous example that I gave where we calculated that savings and we used that year metric, what if in 6 months it gets better and you capitalize? Well, for the new math, we just build in that 6 months of costs and figure out the new math. So if the recoup again is a year, you would know that it would take you 18 months to have the bigger savings. If you're gonna be in your house for 5 years, this is a no-brainer, guys. This is the same thing that many people did in 2020 when that first refi boom went, and then again in 2021 when we hit a second leg down. We have an opportunity again here, I think, for that to happen. Let's not wait to have this conversation for when rates already come down. Let's start pre-planning. If you're one of these people that bought in 2022 or 2023 and you know you want to refi in the future, let's have that convo now so we're prepared. All right, guys, we'll talk to you soon.